mind. Okay, so this is Bitcoin. Let me just clear everything and see what the daily candle was like yesterday. So this, for all intents purposes, that is a bearish candle. You see that? What is it? What kind of candle is that? Well, let me just explain this candle to you so you understand. There's a few things you can learn about yesterday's daily candle on Bitcoin. There's some observations to be had, okay? And it's good to go over these observations because the more we observe, the easier it will be to re-observe in the future when it happens again. So you just keep on observing, and in the future you'll be like, oh, I've seen that before, or oh, I've seen that candle before, oh, I know that's happened before. And then usually what happens in crypto, Bitcoin, and the markets is that history likes to repeat itself. Okay, so it's good to observe. And that's what we are right now. We're observing. Just looking at these candles and this candle formation. And yesterday's daily candle looks bearish. It's this red one here. And effectively it closed. It opened here, pushed up, sold down, and then closed back up here. That's what that candle did. And in the duration of yesterday, even though the price went lower than all of these wicks, this daily low, this daily low, and this daily low, it actually closed above the previous day low. You see that? That's an observation. So it was able to take the liquidity from all of these lows. And when I say take the liquidity, I mean it was able to clear the liquidity. So anyone who had market sell orders underneath these lows sold, because the price came to their level where their market sell orders were triggered, and the price came back up. Okay, so there's some information we can get from that kind of price action. When the price goes down and you get market selling underneath these previous day lows, so you've got lots of market selling, and then the price comes up. And not only does the price come up, it comes back above the previous level, the previous wick, which is the daily wick, that. And it also comes up above this daily level here. It's quite interesting, no? The only thing I don't like about this candle, the only thing, is that there's quite a lot of volume. Okay, you have to bear that in mind. It's always better when the price descends that the volume drops or decreases. And at the moment, because yesterday was quite vigorous selling, what we actually need is for the volume to decrease. We need the selling to stop. That's going to be a very good signal. But effectively what we're experiencing now is a back test. That's what I'm seeing. And this is the level of interest, the daily level of interest. And the way I've got this daily level is from the highs of these daily candles. So where this candle on the daily time frame opened here, and where it closed here. So where it closed, it formed the top of this green candle body, and when it opened, it formed the top of this red candle body. And so what you can do is you can draw a line on the top of those candle bodies and mark that off as your level, and that's called daily level. And right now, as you can see, the price is falling through that level. That's not unexpected. It doesn't mean that the level is broken. It just means that what's happening now with the price action is that the price is searching for liquidity. Ultimately, that's the main thing that happens, is when the price starts to descend in value, it's because there's not enough liquidity, there's not enough buyers at these levels to sustain or to support the higher prices. And if there aren't enough buyers, you get an imbalance, and then therefore the price descends and the sellers overcome the buyers and the price starts going down. So we have this daily level in play. And going back to the daily candle, is this bearish? Well, look, let me just kind of investigate. So the previous day was bearish. Because of this level here. See? You see how this candle went up, closed higher, opened, and then closed lower than the previous day open. See how it closed lower? There. Effectively, what happened was that all of the volume was reversed in this red candle, because the price was able to close underneath the previous day open. That was a very bearish reversal. And what actually happened the next day is the price went up to about 50% of the body, the previous day body. And what I always suggest is that you just take it from the top to the bottom of the body. It actually went to the golden pocket, but I would say 50% is the mark. And then it rejected. And that rejection led to a sell-off. Yeah, and that was yesterday. We had a bit of a rejection. And that rejection also coincided with this other historic level, which is another daily level. That. So potentially, they're all in play. Let me just mark them off properly, so we don't. There's there, and there's that one there. Okay. Good morning, Paisa. We're still into resist, into support right now, simply because we've coming back into this previous level. However, it doesn't look great, does it? It doesn't look strong. It looks weak because you're getting selling, and that's not what you want to see. You want to wait for the selling to stop. That's what we want to see. We want to see the selling to stop, and once the selling stops, then the buying will resume. That's kind of how the market works. It goes from buying to selling to buying to selling. Why are people selling? Well, because they're taking profits. Some people are selling because they're taking profits. Some people are selling because they're covering their long positions. But no one is really selling because they think Bitcoin is going to zero. That's the That's the key observation here. And I think this is the most important observation in my mind. I don't think there's anyone on this planet who thinks Bitcoin is going to zero, unless you're mad. The context is really important. We're 1 month before the halving in March. April is the halving month. That's next month. So in the halving month, Bitcoin has always gone up. And if history repeats itself, next month, which is the halving month, Bitcoin will go up. No one is selling because they're trying to push the price of Bitcoin down. They think, excuse me, Bitcoin is going to zero, or they think Bitcoin is losing its value. We have to understand the reasons why people sell. Why are people selling? Okay. You've got different kinds of people selling in this price action. You've got higher time frame traders who are covering their longs with shorts in this move. And what they do is they'll cover their shorts so that they don't lose USD value. So let's just say, for the sake of argument, this was all shorting. As the price declines, they don't lose USD value because they've shorted their whole position. And then what they will do, they'll be looking to do is on another account, as the price declines, on a separate account, the same people will be looking for longs. So wherever the longs are, they'll be looking to long it on a separate account. And effectively what ends up happening is that the same people will be in longs and shorts at the same time. Okay, they'll have shorts from when the price reversed, and then they'll be looking to build up their long position. And in effect, what's happening is that these people will still be long, because eventually what's going to happen is that their shorts are going to get squeezed, but they'll still be, but what they're doing at the same time is that even though they're in shorts, they're going to accumulate long positions. That's what they do. So most of the people that are sitting in shorts at the highs won't take crazy profits on their shorts. The way they do it is that they'll be adding to their longs as the price declines. They have two completely separate accounts, one for shorts, one for longs. They've already shorted their whole position at the highs, and they're probably now comfortably sitting in a hedge. That's what it is. It's a hedge. They've probably got their position set to break even because we've lost some key levels. Okay, they won't take profit on that short. Most of these shorts won't take profit on the short. Why? Because they just shorted the all-time high and the price has declined. Okay, the reason why they won't take profit is because it's a hedge. So a lot of these bigger players will be sitting on big shorts, and their invalidation will probably be at break even. And then what they will be looking to do, exactly the same people will be looking to long Bitcoin on leverage. And these people will be using a cross leverage platform. So it doesn't matter if their position portfolio is on a shorts position or a long position. It will be combined. The leverage is combined, and so they can use the same equity to leverage, and they can leverage, they can short, they can long, but they'll be doing it on multiple accounts. And that's what's actually happening right now. So right now, I don't think people are selling because they're looking for lower for Bitcoin. They're selling because either they've got big positions in Bitcoin spot and they've just hedged their long positions so they don't lose USD value as the price drops. And then the other types of people that are selling Bitcoin right now are the people who have leveraged long from much lower down, and what they will do is they'll start to deleverage and take profits in the highs of the Bitcoin range. And that's the other type of person who is selling Bitcoin. Okay, so there's two types of people who are selling Bitcoin. The traders don't care. The traders really don't care if the price of Bitcoin goes up or down. They'll just trade. If it goes up or goes down, they'll take their profit. They'll go to the next trade. You're going to get some higher time frame traders who may try to swing short Bitcoin, but I think that's, in the scheme of things, in the context of the Bitcoin halving year and the bull market, it's going to be a very limited amount of people who do that. And most traders will be looking to take their profit quite quickly. They don't necessarily affect the overall price and movement of Bitcoin because they'll be looking to long and short. They're not fussed. They're not really fussed about the way the price moves. And so at the moment, what we're seeing is a little bit of take profit combined with a little bit of covering. Okay. The reason why you cover is because you're not sure about the medium term direction of the price, and you've got some bigger long positions lower down, and then so what you will do is you'll hedge effectively. That's what's happening. I think most of the serious people have already hedged. Personally, that's what I'm imagining. I think what we experienced here and here was some significant hedging from some significant people. And the reason why I think that is because I didn't see any liquidations as we took the liquidity from the highs. I didn't see any crazy liquidation bubbles as we were swing failure the highs, as we were SFPing the highs. And that would have been a good sign, but we didn't see that. And so what I am thinking to myself is a lot of these bigger players on their cross leverage platforms had slightly wider market stop positions so they wouldn't get stopped out, and then there just wasn't enough upwards pressure by liquidity to keep on pushing the price, because people, generally speaking, aren't looking to buy in the highs. Generally speaking, they're not. People are looking to buy on the pullbacks and in the lows. So right now what we're seeing in this correction is just, you could call it a correction, but effectively what it is are longs taking profits. And I'm talking about people who are long from 20,000, 40,000, 30,000, whatever thousands. They're saying, okay, I want to go on a holiday, I want to take a little bit of profit, whatever. And then you've got people who are in longs because they're long Bitcoin, and they're just slowly shorting or building a short to cover their Bitcoin, just to cover their Bitcoin. And so as Bitcoin starts to create pivots, and as you can see, we've got this kind of bearish market structure in play right now. And so we have some pivots here. So we have one here, we have one here. So potentially you could argue maybe even one here. Actually, that's not a pivot because we haven't made a lower low. So the pivot to beat right now, if you're shorting, is this one here. And I'll explain. Look, see this? This is a higher low. These are your higher highs. Actually, to be frank, we change market structure up here. You can clearly see it. That was your higher high. This is your higher low here. Yeah, it's a higher low, higher high, higher high. These are higher lows. This is your lower low. You make a lower low, then you make a lower high. And now we're into a lower low. See that? This is very, I'm just scribbling. Potentially, this is your lower high. Okay. And so as these pivots are being putting in, as we start getting these lower highs, slowly but surely what's going to be happening is that the shorts will start moving their market stop orders down slowly. They'll start moving their market orders. So maybe before they had their invalidation here, maybe now they'll start moving their invalidation to the next pivot. If we now go down and make a lower low, then maybe they'll move it to the next pivot, etc. And they'll just keep on doing that until eventually somewhere in the future they'll get squeezed up. Okay, but if they don't care, because at the end of the day, even if they get squeezed, they'll be in profit because they shorted the highs, and they'll also be in longs as well. So if they get squeezed, their long positions will push up, and actually their overall bias in this market is up. And I think that's really important, because having that overall bias allows you to do things in a certain way that you wouldn't necessarily do otherwise. Okay, so my overall bias in this market is up. I'm not thinking down at all. Everything is up. But that doesn't mean I'm just going to buy the pumps. It just means that I'm looking for higher lows, effectively. That's all it means. Okay, so that's the reason why Bitcoin is correcting now. It's just simply because people are taking profit. People are looking to cover their longs. And we kind of finished with that whole ETF just buy mentality. We're kind of done with that now. I think that kind of idea is over, and we're just looking for a little bit of a correction. And so the best way to see how this is going to correct, or where to the higher, is to look at the higher time frame. So we go to the higher time frame, we look at the monthly candles. Yeah, I mean, look, if the monthly candle closes anywhere here, it may look bearish to most people, but I think this is extremely bullish. The reason why I think this is extremely bullish is because we made a new all-time high. You can never be bearish when you're making new all-time highs. Yeah, like even this second all-time high that we made here, even though the price declined, it wasn't a bearish idea. The idea of making all-time highs, new highs, is bullish, you know, because effectively what it means is that people are buying higher, right? You can go all the way back to 2017 and look at this 2017 all-time high and say, well, that's really bearish. Look what happened. The price dropped. Yeah, even though maybe in most people's imaginations that was bearish, in reality that was bullish, because you put in a higher high on this yearly time frame. Okay, and so all that was needed now was for the price to correct, form a higher low, and eventually it would take out that high. And all the people that needed to do was just keep on buying, effectively, because the higher high was put in. And so when you take that idea and you apply it to the context of today, of the current Bitcoin price action, I think it's really important that we have context. And what I'm suggesting is that the best way to go about making money from crypto is buying in a bull market, effectively. But obviously people are, then it comes down to how you buy, you know, the strategies that you employ for taking profit, etc, etc, etc. That's all personal stuff. Everyone has their own methods. Everyone is comfortable with different risk appetites. They have different risk appetites, and no one is the same. Okay, no one is absolutely perfectly right. Everyone is different. So you just have to kind of discover your own self to see what you're comfortable with, and you have to come up with a strategy which works for you. Okay, now the techniques that I'm using on the most part, when I say, when I'm talking about crypto in the context of a higher time frame cyclical bull market, I'm talking about dollar cost averaging. Really, honestly, I think most people should dollar cost average. Just buy a little bit every day, don't care about the price, and be very kind of diversified in your risk appetite in your portfolio, and then on average you will make gains. The trading that I'm talking about when it comes to Bitcoin is very specific type of trading, very specific, and it's about having a very separate trading account, completely separate from your long-term trading account, and you will risk 1% of that at max, and then you will take profit very quickly. Very different kind of trading. And actually that's what most trading is. Most trading is that it's done by bots, but humans do it too. Bots do it better, because they're not very emotional. That's the kind of trading that I'm talking about when I'm looking at Bitcoin. Everything else is just for fun. Everything else is speculative. Let's just see what's happening to Bitcoin. Let's try and predict the price. You know, it's mainly or mostly it's entertainment value, and it obviously will have some educational benefit too, because most people don't really know what I'm talking about, and so I'm kind of giving people some factual knowledge about how the markets work and how candles move and where there are technical levels of support and resistance, etc. And it's quite interesting for most people because it's a fascinating subject, and it's quite large. There's quite a lot of material to receive and to learn, to understand. So I like to look at everything. I like to look at everything to contemplate the price action, and most of the time I'm wrong and sometimes I'm right. And then as long as you can create good trade plans, then you will always be right, because then it will just be about executing your trade plans and appropriating the correct risk versus reward, and that's it. I'm taking a profit. So yesterday when I was looking at the range, I'm coming back to these daily candles now. Sorry, I kind of went on a little bit of a tangent. I don't actually think yesterday's candle was bearish personally. Okay, I'll tell you why. I think if it was a bearish continuation candle, it should have closed underneath the previous day wick, and it should have closed underneath this daily level. Yeah, we should have had much stronger closes if the bears were in control. And what I'm seeing are buying tails. You see these wicks? These are buying tails. This means the price is being bought. Okay. Now it doesn't necessarily mean it's being bought by new entrants. It could just be buying back by people who have already shorted from the top. But that's also quite bullish too. If you've got people shorting at the highs and they're quickly taking profit, that's bullish. If you have shorts shorting on the highs and not taking profit, that's really bearish. Yeah, that's extremely bearish. You want shorts to short, but then you want shorts to take profit. That's bullish. And effectively when they take profits, they're buying the price. And what I'm seeing is that the shorts are taking profits quite early. They're not waiting. Okay, you see how this price declined here? The first SFP we got, the price went up quite a lot. The second SFP we got, the price went up. The third SFP we got, the price went up. So for me, that's a very bullish signal that shorts are not holding on to their shorts. Because if you're shorting for the duration of a long bear market, you will try not to take profit on your shorts. You'll try to hold them as long as possible, mainly because you're going to be making money through the funding fee on the most part, and mainly because you're expecting lower prices. When shorts are taking profit quickly, it's because they're not expecting lower prices, or because they're not interested in the funding fee, because they're not interested in a prolonged trade. So there's a psychological element to the why shorts are taking profit early. Yeah. And you can see that in the price section. I can see in the price section that the first opportunity shorts are getting, they're taking profit. This swing failure here was the first opportunity, and these are shorts taking profit. These aren't longs entering, because people are still going to find it difficult to long swing failures. It's not for everyone. But shorts will take profit at swing failures. They will. Like here is another one. Shorts taking profit, and you had another one here, all the way down to here. I think that's a very bullish indication in my mind that shorts are taking profit. Okay, it's just an observation. I'm just observing what's happening with the price. The other thing I'm observing with the price is that even though we lost a key level, which is this previous all-time high, market all-time high, yesterday's daily candle didn't actually close underneath it. Can you see? It actually held that line, wick through it, but it held. And even though that looks weak, I don't necessarily think that's weak just yet, because we still have to wait to see how the weekly closes. The weekly is really important. And then also, even if we close underneath it, we haven't back tested it. Sometimes what happens is the price can close underneath, get people bearish, and then just close right back above, fake everyone out. Can always do that. And so naturally, the higher the time frame candles have more influence on the way the price moves. It gives a much better indication of the behavior of the price. But right now, I'm not seeing bearishness at the moment, even though the price is declining. I'm just seeing normal kind of behavior in what you would expect after making a new all-time high. Actually, is what you would expect. You would expect some kind of take profit, etc., etc., what I was describing before. Now, what we have to see, what we have to ascertain is what the future price action will be and how that could reflect on the future, and also good areas to long if we're looking to long. Okay. And most people who are looking to long are always thinking to themselves, the lower the better. But most people don't long lower because they get very scared, because they think the price is going to go down to zero. So that's why we do technical analysis, to find confidence in areas of interest. So I had some trades up from yesterday. Let me just kind of have a look at those now. These trades that I'm looking at now are on local time frame. They're not higher time frame trades. And let me just kind of see. So I had it in my mind that if we get above this previous bull market all-time high, there was a trade to be had. I didn't take that trade because I wasn't seeing the back test that I wanted to see on the all-time high. Yeah, see, I'll show you. I'll kind of hide that now. Hide these. And this takes a little bit of experience, but even though the price came above the previous all-time high, you see this candle came up. Let's do it on the 30-minute candle, and then it just fell back through. So I couldn't see a reaction. This came up, it held it with one candle, and the second one fell through. This looked like it was holding, and then it fell through, and then it wasn't. I didn't think it was strong enough, to be honest with you. I didn't get the sense that this line was holding for a back test. Okay, what I was really interested to see was this. So as the price started moving above these highs, so here you can see what I'm talking about. You have this kind of behavior in and around this line. So I had it in my mind, but once you put in these highs here, you don't want to go down anymore. You see, you want to just go up, and you don't even have to try along the low. As soon as the price starts going up, you have a really easy invalidation, and that's actually the trade then. So that becomes your trade. As the price goes up, you can enter higher, but at least then you know the price is going up and you have an easy invalidation, because then if the price goes up, you don't expect this. Okay, but I didn't get that kind of behavior that I was looking for. Okay, at any point in time, if we started going up, you could have just longed. The price would have moved up quite quickly. So it isn't just about, you have to see these lines hold. You can't just assume that they're going to hold. Actually, the trade to be had, which I didn't take because I wasn't paying attention, was the short. You see, I had this short planned, and that did work potentially. And we did get a back test. So just kind of looking at it locally, that was a trade. I had an idea for a short, that was a trade, and as you can see now, people are taking profit. So you're going to get people who have taken that short, and maybe their invalidation is there, maybe it's slightly lower, and they'll just take their profit now, and then they'll be sitting in a risk-free trade. But this is just trading. I mean, I'm not like talking about the overall price action. Ultimately, what will need to happen for the price to move up, ultimately, is that this yellow line that I've marked out, this previous bull market all-time high, will need to flip into support. It will need to happen. Okay, it's going to need to happen in the future, and that's going to be an easy sign for us to see when the price is going to move up. Until that happens, it's not going to move up. Yeah, so we've had one attempt already. This is like an attempt. I call that an attempt, and we may get future attempts. I don't think the price is going to go down just like that. It doesn't look like it wants to go down just like that. And what I was saying to you before is true. Shorts are taking their profit. Like, look, even with these people who shorted here in this trade that I had planned, which I didn't take, this short, this one, yeah, this one. Do you see how the price came down and bounced up? This is a take profit. So shorts are taking profit. They're not holding on to their shorts. They're not hoping for lower. They're not aiming for lower. They're not waiting for lower before they take their profits. Usually when the market is bearish, shorts will just, they'll just like whatever. They'll short and they'll just forget about it. They'll go away on holiday. They'll come back in 2 weeks. The price is down 50%. They don't even care. At the end of the last bull market, that's what was happening. People were shorting and they didn't even go back to the charts for weeks. This is not what's happening right now. What's happening now is that people are shorting at key levels, but they're taking profit very quickly. Okay. And in reverse, what you're getting is the reverse situation. You're getting people long and walk away. You're getting people long and not think about it. And completely the opposite situation. You're getting people long and hold their longs for longer, whereas you're getting the shorts close their shorts very quickly. The first opportunity on most cases. This is something to consider. That's what I'm seeing in the price action. So looking at the range that we're in now, I think potentially we're just going to be a little bit range bound. I think we have been range bound for a while. And I also think that these all-time highs were based on my idea that we were still range bound. It was a little bit of a deviation from the range, which was much lower. So what's happened is that the volume that we put in at the highs has actually moved the volume range. You can see up to this point it was slightly lower, and gradually as the price has been making new highs, you can clearly see that the volume range has been moving with the price higher and higher and higher. And what we have now is we have quite a balanced range in this high area. Okay, and I think this is your range now. This is basically your range, and I think most probably now we're just going to be range bound for the next 2 or 3 weeks. We're just going to be range bound. I've said that we've been range bound, but what's actually happened is that the range has moved to a higher place. That's all. But we've still been range bound, and I think we're range bound. So I'm going to mark off my range, and I always do this. Value very low. You see how the point of control of the range is on this daily level here. That's our range now. Okay, and I mean, I'm just kind of ignoring this first part, just kind of taking it from here, see from there. It's basically a range, right? And what I would suggest is just trade the range until the range eventually breaks and my bias is up. Okay, that's my bias. Let's see, just get rid of these brush strokes. So the other thing that I had yesterday was this idea of a pattern forming. Let's see. Yeah. That would confirm my idea of being range bound. And this fractal I've taken from this range here. You can see it's a kind of mirror image of this fractal here. Yeah. And effectively what I'm suggesting is that we take the highs, take the lows, and then just start going back up again sometime. Maybe at the end of April, when the halving happens, we start going up again. That's what I'm thinking to myself. And maybe April we get some kind of indecision. I don't know. So if this is to play out, then potentially the all-time high is going to end up the previous all-time high is going to end up at the middle of the range. So then in that case I would ignore the previous all-time high as the indicator for longing and shorting, because you don't want to long the middle of the range, you want to long the edges of the range. That would be better. I think that's probably what's going to happen actually. So I have this trade idea down there and there. That would be the best trade. Any questions? It'd be quite hard to trade this range unless you are looking to catch the edges of the range. The edges of the range are going to be the value area low, the all-time high, literally. I think that's probably the best places to take trades right now in this range. Potentially you're going to see, if this fractal plays out, we're going to see quite a boring range bound behavior. Maybe it will fall into the lows of this range for a while. Maybe it will come back up and push up to the all-time high. And we're just going to be range locked, and we're just going to be putting in volume at these highs. And then we'll just have to see what happens. I'm not really contemplating a push down just because of the context. Like, it makes no sense. This is the first all-time high we've made since the last bull market. It's before the halving. The price isn't going to go to zero. So it's just, anyone who thinks that is just, I can't even imagine it. It just makes no sense. Yeah. If we were to go down to like a lower, much lower prices now before the halving, after we've just put in an all-time high, I can't see it. I think it's just stupid to even contemplate. I think it'd be much more logical to consider that if we start losing this range. Yeah, because we have a very defined range at the moment based on this volume area. I've drawn it off by these two red lines. And then in terms of price, well, I don't necessarily think that we should get below the current month low, which is much lower, which is down here. So I think however this month closes in the next couple of weeks, you're going to have this kind of candle. And actually that candle is going to be a 3-month candle. So the 3-month candle is going to be printed. But let's just have a look at this candle. Let me just call it the SFP 3-month low. Let me just see where it is on our chart. There it is. See that? I think that's the range really. From the 3-month low candle to the all-time high is kind of where we're stuck. And so when you're looking at it in that perspective, when your perspective changes a little bit now, because when you, instead of thinking that we're going down to nothing or we're going up to a million, when you start thinking to yourself, we're range bound now, we're just locked in a range, then you can clearly see that in the volume range, we're somewhere in the middle because these red lines are the volume range. But in terms of the price range, we're kind of slightly on the high side, yeah? And potentially it could go all the way down here. That would be correct. And I think that would be acceptable behavior, and that would be acceptable bullish behavior. I wouldn't panic if we went down, took the liquidity from this pivot before we continued up. Like, I think that would be okay. I wouldn't have a problem with that. Yeah, I think it'd be very bullish if that didn't happen and we just kept on putting higher lows. But I don't think it would be bearish if we went down all the way down to 59,000, took out the liquidity from that low, and then started making our way up. Okay. Now, if we lose the low, back test to go down, things start to change again now. Why? Why do things change? Okay, and the why is really important. The reason why things change when you lose that low and you start making your way down is because what has happened is you've put in a lot of volume in this higher range, and that becomes trapped liquidity for the future. So therefore, to get back into the range, you're going to need enough volume in the future to clear up that liquidity, because naturally if we do lose that range and don't get an immediate rejection from the lower areas like that, if it starts to go down and then does something like that, then in the future you're going to get a situation where people who have positions in these highs will sell at break even, or they'll just keep on buying, and then when it gets back up to there, they'll take their profit at 50% or something like that. So you're going to get sell pressure. So it's going to find it a lot more difficult to get through if we don't just go down and just get rejected and come back up. Yeah. And so at the moment I'm not contemplating that idea, because we're nowhere near that. I think that situation could happen if and when we lose that pivot and we start making our way down. Okay, then we can start talking about that. Until that happens, then I think there's no point even considering lower at all. Yeah, we're in the Bitcoin bull market, pre-halving. Like, I just think it's silly to think that way. Okay, I can't see it. I think because when I'm looking at these monthly time frame charts, I'll show you. This is why I'm in that mind. Let me just hide these. This is the weekly time frame. If we're going to go down to where people want to buy, which is somewhere in this range here, and probably not even this range, probably just some kind of SR flip here, that would be at about 50,000, right? I'm not saying it can't happen, and I've actually said that could, if that did happen, that would look quite bullish, because you could potentially end up with some kind of inverse head and shoulders type pattern, but that's something else. Let's say we do get down here. You see, in terms of the way, you have to imagine the candles and the way the candles are going to behave. You get in there again expecting to go down there now. You're going to be expecting another red candle next week, and the red candle maybe another 2-3 weeks down here. You're already in May. The halving's already happened, you know, like I don't think we have time. I don't think we have the time to do that. I don't think we have the time to go down to 40,000. It's not just going to go down in a straight line. I'm seeing that the shorts are buying back really quickly. I'm not seeing shorts holding, and I'm not seeing the longs closing out en masse. I see that longs are just hodling basically, or their leveraging longs are not closing out. So I just don't think we have the time to do that. And so actually what I'm thinking to myself, what's more likely is another flat correction somewhere in the highs here. And it could just be normal. It could just be consolidation underneath resistance. What is the resistance? Resistance is the previous bull market all-time high. That's your line in the sand. We could now, for the next 4 to 6 weeks, just consolidate here. Right? Maybe for 2 months, we could just consolidate here. And the longer we consolidate here, the more likely people will be to buy higher prices of Bitcoin. Because the closer it gets to the halving event, the more inclined people are going to be buying Bitcoin at the current price. And that's what I'm seeing right now in the way the price is moving. I'm not seeing crazy bearishness right now. Good morning, David. David, why are you on my stream? So you should be doing something else, like enjoying life. So yeah, so I think because the previous bull market high I wouldn't like take it too seriously right now. I think the range is more important. And if we're looking to long, then what we want to do is we want to try and long the bottom of the range as low as possible. And there's basically right now there's two good longs on the table. There's the swing failure of just this pivot that's just been put in. That's an easy one. Oh, you have some single prints that haven't been tapped yet. Look, see that? So actually, I think probably that's your next big long, huh? If we can just clear that liquidity, I don't know if it's going to happen. That would be nice. It'd be nice if we could just go down into that level as well. But the entry would be the swing failure. And I think with this one, you could be quite aggressive and just take it. But I mean, I wouldn't mind if we were able to get back into lower the, because that would line up with the golden pocket, the value area, almost the value area low, the previous range value area high, these single prints, this SR flip, and the 618 of this fib pull from this pivot to the high. I mean, that's like literally going to be a really great long, but I don't know if it's going to come. The entry is going to be this swing failure, but I just think that's a really good long. Is there a daily level there as well? Yeah, there's a daily level there as well. See that? So the lower the better, really. You've got quite a strong level there. That'd be an amazing long. And then the next long, no, I think that would be the one, actually. Can long it back up to the highs there, and you can just keep once that's in, you could probably keep on longing that. It'll be a longing match, I think. That's what I'm imagining. Let's see. That's kind of what I'm thinking. Now I remember that when Daniel took a long before, his invalidation wasn't hit, and when he took his long before, it was here, wasn't it? It was this one. He took his long here and he wasn't invalidated. It never stopped him out, and eventually it went up to the moon. So if Daniel is longing now, I am thinking that it's possible that this invalidation doesn't get hit again the second time. I'm thinking that we make a high low, but it'd be hard to take that trade without a very wide stop. So potentially there is something else going on. We have a little bit of a trend line here. So maybe then what you would think about doing is, if you don't take this pivot for a swing failure, and you're just making a higher low like that, as long as you break that line, then you have your invalidation, which is the current pivot that's been put in. Because then if you do break, you're not expecting the price to come back like that. That wouldn't make sense. Then you will be invalidated, and that would be a higher low idea based on this trend line that hasn't broken yet. Yeah, but I really think that, honestly, I think that I'm feeling really bullish, so I'm not feeling bearish at all for some reason. And I think what like I explain, you don't have to watch the stream. I explained in the beginning of the stream that what I'm seeing now is that shorts, there's only two reasons to short in this market right now. You short to hedge your big long positions, or you short because you're closing your longs. Yeah, and what I'm seeing is that the longs are closing, but not many longs, not crazy. No, you're not getting many crazy amounts of longs closing, and then the shorts that are entering are quickly taking profit. You see, they're quickly taking profit, At every opportunity, I see shorts taking profit, and the reason why shorts quickly take profit is because they're not expecting lower prices. They're not holding for lower. They're quickly taking their profits because they're not expecting a prolonged bear market. They're still expecting higher prices. So shorts are quickly taking profit. That's what I'm seeing. It's a behavioral anomaly, or behavioral observation. So, all right. Actually, I think potentially you could even just get something like this, because that pivot looks quite good. I think potentially you could just get this, and just swing failure that low. I'll put an alert on that one. You could put, yeah. See a swing failure here, I probably would take it. This one. And then that's your trade, actually. And maybe then we will push up. I don't know. Or just, maybe we'll just go down. I don't know. It's possible. We'll see. All right. I think... Yeah, I'm actually feeling that the bears are losing this battle. I'm not seeing crazy bearishness. So let's see. Niamat Ula. He's saying, due to my own mistakes today, I lost $50. I'm sorry to hear that. What mistakes were they? I'm curious to know. All right. I think that's Bitcoin. I think people are curious about TRVL.